You're watching Expert Insights.
Hi, everybody. Today is May 9th, 2025. My name is Alex Sasso. I'm the manager of the NCM Income Growth Fund, our small mid-cap dividend-focused offering, and the NCM Small Companies Fund. And that offering is just as what the title suggests. I would summarize it this way. I would summarize it as less bad than originally feared, at least for now. Markets are feeling some reprieve just recently. Liberation Day created uncertainty and what I would call peak fear. And so what happened is, in my opinion, the markets gave the US administration a clear message, and the White House responded with some material exemptions and a 90-day delay on tariffs. And over the next few weeks and months, we might be getting some good news and hints of trade deals that I think will sideline some of the uncertainty. As we know, we got the USMCA that comes due in 2026. Hopefully it'll be resolved well before then, and on terms that are favorable to both Canada and the US, and of course Mexico as well. Earnings to us look a little bit what I would call peakish. And now that's not the end of the world. We see this quite often. And as long as unemployment is kept in check, as long as inflation is kept in check, and as long as GDP continues to show positive numbers, we could see a reacceleration of earnings numbers, particularly as we start looking forward to 2026. Now, we are seeing leading indicators rolling over. We're seeing estimate revisions going negative, and the consumer pulling back. Businesses are not investing right now because of this uncertainty. Now, the percentage of upward revision, earnings revisions 12 months out, as we look 12 months out relative to total revenue, has dropped to about 27%. The long-term average is about 40%. Now, luckily for us here in Canada, we have a price earnings multiple on the market that looks really attractive and is a relative bargain, in my opinion, compared to our neighbors just south of us. We made significant changes to the portfolio right around the time of the US election, so back in November of 2024. And essentially what we did is we went defensive by selling many of our positions in companies that made products here in Canada but sold them in US, i.e. had US dollar revenues. And we did this because we were worried about tariffs. Now, we did sell a manufacturing company called Martin Rea. They're an auto parts supplier. It's a wonderful company, very inexpensive, had some good growth in front of it, was ramping up some production lines for new parts that we thought would reaccelerate earnings. But we sold it partly because of the impact tariffs would have on that business. That stock has not performed well recently, but we're keeping an eye on it, and we may reassess, also knowing, though, that we have the expiration of the USMCA in 2026. Now, in terms of the outlook for the rest of the year, we're going to remain defensive with an elevated cash position until we have more confidence and clarity as to what both the geopolitical situation holds and how the global trade order will play out. So what's key go forward is how these tariffs are going to play out with regards to the Fed put. I think that's going to be really important, how they're going to play out with inflation, because inflation is going to dictate how how aggressive or accommodative the Fed is going to be, and of course unemployment and the impact on employment in the US and in Canada, because those will determine whether or not central bankers around the world need to be accommodative So again, defensive, but looking for signs to put money to work to become more offensive. Any comments or suggestions, please reach out to your local salesperson, a regional salesperson at NCM, or email us at sales@ncminvestments.com.
Dear financial advisors, you were made for times like these. The times when nothing seems right, and the ones when anything seems possible. Your advice turns potential into reality. It makes dreams come true. And through it all, there's one investment company that's made for you.